Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, back here on the Investor Coaching Show, I am Paul Winkler, talking money and investing. All right, so, one of the things that has been happening recently with markets, it's been a fascinating month. The whole month of November has been fascinating in that you had big market downturns and then only to be followed by this big recovery. Some of the areas that have not done as well, we'll talk a little bit about in a second, because I think it's something that I have talked about so much that you'd expect me to talk more about it. So I'll get into it. But one of the things that has been talked about a lot are the companies that have been winning the AI games. The whole AI race, the whole technology, computer chips, faster chips, more energy needed to actually drive these chips. And this has been an area that has been not unlike with the late 90s. Remember in the late 90s, we had all of this technology coming out. People were starting to use laptop computers. They were using technology a lot more than they had been previously because it was just more accessible. It was just easier. I remember in 1989 working for a huge insurance company and sending out applications for insurance over the internet. We were way, way ahead of our time. I mean, nobody was doing that. Now, we had to learn how to operate DOS, and if you, I was talking to a nephew, it was, I guess, well, I say it's not it's kind of, family relationships as far as how to, second removed or anything. I'm terrible on that type of stuff. So I guess he's not technically a nephew. But anyway, talking with a young man in the family, I'll just put it that way. And he's using computers and he's in coding and, he's doing like software development, I guess, is something like that. Sort of, kind of. But I looked at his computer screen and I said, Taylor, oh my gosh, I remember looking at that garbage back in the late 80s. I can't believe they're still doing that.
Not the late 80s.
Yes, I said 1989. That's when I was actually working
89.
Yes, I was working for an insurance company, and we were sending applications over the internet. And we were using DOS, disk operating system, and I was typing things like msconfig to try to get the computer to do things. I don't even remember what it did anymore. But he was doing that, and I was, wow. But this period in time we're going through right now is so much like that, in that back then it was, how do we use computers? How do we make them usable? And how do we make them easy to operate? So Windows, of
so
course,
you're telling me it was harder to operate back in the day?
Oh, yeah. Yeah, Windows was a game changer. I can click on this visual
Microsoft
thing, and this will do what I needed to do. This program will calculate things. This program will alter pictures. This program will, whatever.
My question is, off the beat, off the cuff. So they fired you guys for not knowing how to use that type of software?
Oh, no. We had to learn how to use it. Fired us?
Mm-hmm.
No, where'd you get that?
Like, fired you guys, like, okay, if you did not know how to type, or did you not know how to download it?
Oh, I know where you're going.
Software.
If you don't learn how to use AI, Leviticus, you're gone. I know where you're going. I get where you're going. I know where you're going.
Yeah.
No, that wasn't. Well, you had to. It was just not an. It was not an if and or but. You had to learn how to do it, and of course we did. Or you change industries, you get out of the industry. But I wasn't going to get out of the industry. I wanted to do what I do now. So what happens is this. So we're doing this, work with these computers, and all of a sudden it becomes easier to use. And then we have this tech bubble where everything just takes off. The whole industry just takes off. And then the companies that were putting together the programs and putting together the, like the websites, you think about all the websites that were of companies trying to do things over the internet that didn't succeed. Well, they think the same thing's going on right now. That's literally what they were talking about. Same stuff, different day. And the
age of scaling, and we're moving back to the age of research. In his words, we're in a world where there are more companies than ideas right now by quite a bit, which would have like longer term ramifications for how much this stuff is going to advance.
And the question is, which companies are going to succeed? Which companies are not going to succeed? That's what we never know.
It certainly would. And how many of those companies will pass by the wayside, of course, and or have a particular product that will get hoovered up by one of the bigger names, I guess, continues to be a question.
And it's not necessarily the companies that go away, is what he's saying right there. David's saying basically some of these companies are going to get sucked up. They're actually going to end up being acquired by another company. It may not necessarily be the end of the world. And this is something I was talking about, recently in front of a group. So you look at the Dow Jones Industrial Average 30 years ago. A totally different group of companies today. Companies come and they go much more rapidly than ever. So that's why it's so impossible to figure out which stocks are going to do better than others.
The overall thesis continues, though, which is there's an enormous amount of money. Nobody's stopping the spend. And that's where we stand right now, how that spend is going to ultimately work out. And then the bigger question in terms of the return on invested capital that we all talk about that we're not going to have an answer to for potentially years will remain.
Well, and I think.
And you don't know what is going to happen. This is why I'm always making the point that you can't invest in individual stocks and think that you're going to come out ahead. And matter of fact, there was an interesting article about what millennials are doing, and I'm going to talk about that next. How are millennials investing? What are they looking for as far as investments? And how's that turning out, or how's it likely to turn out?
Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities and interest-bearing accounts and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax.
The whole thing, I think, what is fascinating with younger people, millennials right now, is they're trying to get this investing thing figured out. There was an article talking about meet teens investing in stocks for their future home and retirement. And it's talking about this one young girl, and she's trying to figure this stuff out. 13-year-old from Massachusetts. She's investing in the stock market. She can't vote or drive, but she can trade stocks, sort of. 13-year-old from Massachusetts wants to buy or sell. She needs her mother's permission. She said she likes to buy stock in companies whose products she uses, like Netflix and McDonald's. Now, here's the problem with that. You buy stock in the companies that you use. Why would you do that? Well, I want to buy those companies because I think they're good. And if they're good, then they should be good investments, right? No, absolutely not. If you look at the Nifty 50 in the 1970s, the media thought these companies were the best. They hung the moon. Ended up being some of the worst investments going forward. You look at companies that you think are good and believe that for some reason they'll be good investments because you believe that you're the only one seeing that they are good. Somebody was actually talking about one major company. I was talking to somebody after we were a bunch of friends. We were all out for dinner, and one of them said something about this huge company, and I said, "Oh, why do you want to invest in that?" And she said, "Oh, I think it's a great company." And I said, oh, I agree. I totally agree. It's a great company. I said, do you know what companies normally sell for? And she goes, well, and based on what? And I said, based on earnings. It goes, no. And I said, about $16. And I said, you know what that company's selling for? She goes, no. And I said, $60. She was like, what? And I said, yeah, because everybody thinks they're good. You know, if a company is that great, you're thinking that your returns are going to be really good investing in it. But what you're also assuming is that they want to pay a lot to use your money, the way I like to put it. Because when it gets down to it, what's my rate of return is my cost of capital. The cost is to use your capital, the cost to use your money. If it's high, that means that they have to pay a lot to use your money. Now, companies that are really good usually don't have to pay much to use your money because they're good and everybody recognizes it. So the first mistake this 13-year-old's making. I wanted to see if it would work and see how much money I could guess, she says. She started investing in her mother's suggestion, and she started, she's hauling her neighbor's trash bins to the curb and, really industrious young lady. And the thing that happens here, she saw her money grow further down the article. It grew by more than $500 in a year. And she was on board, it says. And all I could think of as I read that is that's probably the worst thing that could happen to this young lady. Success. Because you believe that it's skill that leads to the success. You believe you're really good. I'm really good. This is amazing. Look how well I've done. And this is exactly what happens at schools all around America, the stock market game. They have this thing where these brokers go into schools and they teach people how to trade stocks. They're teaching kids how to gamble. And, it seems like a great effective tool. It is for the investment industry.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.